I don't care that other people, that Ethereum and other assets are doing well. I care about how our clients are doing, and they are loving what we've done from what I can see in the numbers. And our commitment is to continue doing that and build around the values they've come to know and trust about LEDN today.
Wish you could access cash without selling your Bitcoin? LEDN makes that possible. The global leader in Bitcoin-backed lending, LEDN has issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. Why is a LEDN loan different? With custodied loans, collateral is not lent out to generate interest, no credit checks, funds in less than 12 hours, no monthly payments, repay whenever you want with zero penalties. And proof of reserves reports verified by a top accounting firm are published every 6 months. LEDN gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at LEDN.io. That's LEDN.io. Hey everyone, I'm Jen Sanasi, and there is a lot going on in the crypto world today. I'm joined now by LEDN co-founder and chief sales officer Mauricio Di Bartolomeo. Mauricio, how's it going?
It's going really well, Jen. Thanks for having me on. It is a very busy morning of news flow and pretty relevant news, I think, even ahead of the Fed interest rate decision. It seems like, crypto is the volume of headlines that's coming our way is just almost hard to keep up with, I would say. There's just a lot of news.
There is a lot to keep up with. Of course, this interview is being recorded ahead of the Fed rate decision, the Fed press conference. I'm not sure that it will be published by then. Most are expecting that the rates remain steady. There are legal developments that are happening today. The markets are kind of stagnant. Talk to me about what you've been watching.
Yeah, a few things that I've been paying attention to. So I've been following the Tornado Cash trial over the last few weeks. And on that front, we had an interesting development last night where the Samurai case, or the people involved in the Samurai case who had initially pled not guilty to some of the charges, have changed and are now pleading guilty on the charges. And what the market or observers seem to interpret this as is that they are potentially anticipating for a guilty verdict on the Tornado Cash trial. That trial result or that verdict could come out as early as this afternoon or tomorrow. And people are saying or are interpreting this as a potential blow to DeFi. Again, this is not out there yet. This is just people speculating, I guess, based on the change in plea from the Samurai case and the verdict of Tornado Cash coming out this afternoon. And at the same time, you have two very interesting headlines this morning on the opposite end of that spectrum, which is that ETF market participants or authorized participants for the ETFs can now issue in-kind minting and redemptions for those ETFs. And also that partnership between JP Morgan and Coinbase. What I am interpreting from these two events is that it seems like regulators are on board to make the lives of banks and other regulated participants like ETFs, et cetera, easier and increasingly facilitate that merger between traditional finance and regulated crypto finance or Bitcoin finance. And seemingly they are going to be making life difficult for some of the unregulated services that try to offer similar, I would say, offerings to those banks. And the reason I say that, or the additional reference point that I'm adding into that equation, is that if you look at some of the major tokens from some of these unregulated, decentralized finance platforms, they've been selling off pretty hard so far this week. So TBD on how this plays out, but reading between the lines, it seems that they're trying to make the path for regulated services easier and the opposite for the unregulated players.
That's a really interesting observation. I know when I took a look at the markets this morning, a lot of people are saying, is altcoin season over? But there really hasn't been a driver for this narrative. Talk to me a little bit about what this could mean for the DeFi ecosystem. And I ask you this because folks in the United States were particularly excited that the new administration seemed very welcoming to the DeFi ecosystem. The president himself's family members they have a DeFi project in World Liberty Financial. And so just talk to me about what this instance means for DeFi, and could there be a little bit of push and pull from the administration and policymakers and regulators?
Yeah, it's hard to really suss out how the entire set of implications that this could have for decentralized finance. But what I can see is that there is a tension among the desire from regulators to want to allow more of these pro-privacy types of services, while at the same time balancing the fact that they do have an international sanctions regime. They do have things like OFAC that is supposed to signal and flag out bad players and box them out for participating in the regulated financial systems. And they, I think, are starting to understand that in true decentralized protocols, they will lose their ability to have oversight over this. There will be no recourse. There will be no way of flagging or filtering these transactions. And I think they're wrestling with that right now because on the one side, they want to make sure that the future of this industry is built in the United States. But on the other side, they also don't want to undermine their entire institutional regulatory framework that they've built over the years. And again, I don't really know how that tension resolves itself, but it seems to me from the events I'm seeing this morning that they're leaning more towards protecting that regulated side of the house, while at the same time trying to keep an olive branch open for these types of decentralized and regulated services. It'll be interesting to see how it plays out. Obviously, we at LEDN have taken a regulated path or a regulated approach to this industry. And that is just simply the view of one market actor. You can say that for that reason, I have a bit of a biased view to what I'm seeing in the market, but it's not to say that I'm trying to make it look that way. It is, I'm just reading the news that's in front of me, and that's what I'm taking away from it.
Let's talk about LEDN, because I know recently LEDN dropped support for Ethereum. And if I connect the dots here, I feel like just listening to you speak here that maybe one of the reasons was driven by regulation and policy. So maybe just talk to me about why drop support for Ethereum and focus only on Bitcoin in this climate.
Yeah, so we announced several changes to the LEDN platform as of July 1st. Number one is we went back to our Bitcoin-only roots, so no more support for Ethereum on the platform. We went to an entirely custodied Bitcoin-backed loan model. So the only loans at LEDN are Bitcoin-backed loans where the Bitcoin sits in custody. And the last one is we cease all yield activity. So we cease all Bitcoin lending to generate any yield. And the reason for Ethereum, there's a couple of reasons for that, but primarily is that we listen to our clients, and our clients are predominantly Bitcoiners. At its peak, Ethereum-backed loans made up about 5% of our loan book. By the time we made the announcement, that was down to about 2%. And our clients just want us to focus, and they want to see us build more things for Bitcoin and for a Bitcoin future. That is on the one side. The other additional consideration is that people that like Ethereum generally have a higher risk tolerance. And if they already have the risk tolerance to hold an asset like Ethereum, Ethereum also has native programmability that allows you to go and access some of these decentralized services without having to wrap it. And with Bitcoin, if you wanted to access any type of services like the ones we offer through decentralized finance, you would still have to wrap the Bitcoin, which has its own set of risks, and then take that to a decentralized finance protocol, which then has another set of risks on top of that. So we believe there's a very clear path and a very strong narrative and use case for Bitcoin as collateral in a regulated environment and a regulated ecosystem. And that is necessarily true for Ethereum because it has this other side of the spectrum that you can still use without having to wrap it.
I want to talk about Bitcoin in just a second, but I have to ask you, since you made this announcement that there was no longer support for Ethereum, Ethereum has really blown up and is really taken on a little bit more of a mainstream narrative, right? People who are holding Ethereum now or who maybe are interested in Ethereum now might not have that risk tolerance. Do you think that you'll ever bring the product back? And how are you reading those headlines? Do you have a little bit of regret for getting rid of this product?
Not one, not an inch. And I'll tell you why, because July at LEDN has been the biggest month that this business has ever had. We've broken every record on any metric that we track on the platform. New clients, loans originated, new loans originated. It's just been amazing to see the response from our clients and the community after we made these announcements. So I don't care that other people, that Ethereum and other assets are doing well. I care about how our clients are doing, and they are loving what we've done from what I can see in the numbers. And our commitment is to continue doing that and build around the values they've come to know and trust about LEDN today. So no regrets whatsoever.
Well, that's great to hear. I want to talk about those clients now. I mean, where are you seeing the most demand come from for Bitcoin-backed lending?
It's pretty broad-based, I would say. LEDN services clients in over 100 countries. I have to admit, or I will have to say that there has been a big portion of that growth coming from the United States. I think that also has to do with the embrace that the administration has put behind the industry. So that's been growing leaps and bounds. So has our business in Europe and parts in Latin America, where those have been really historically our core markets. I think it's incredibly broad based. There's a big, I would say, driver of growth coming out of the US. One of the biggest use cases that we're seeing today, both in the US and abroad, is using our loans to buy real estate. So in many cases, people use LEDN to translate some of that digital wealth into their real life experience, whether that is buying a house, starting a business, renovating a house. There's a lot of that. And so it's really people taking that digital wealth to enhance their day to day. And what form that takes, that changes on the person. Some people are moving to El Salvador. Some people are building a new house. Some people bought a cottage or a ranch. And I'm always surprised at the amount of things people do with our loans. People pay for surgery, medicine, medical treatments. So every day we get a new use case that we hadn't really considered. And it's beautiful to see. But I think the driver behind all of this is this convergence around the idea that you don't sell your Bitcoin. You borrow against it. If you need anything, why would you sell your best performing asset?
Talk to me a little bit about how the loan works. If I have, some Bitcoin that's been sitting around in my wallet and I need to take some cash out to buy a home, how does it work on the platform?
It's very simple. So setting up an account at LEDN takes 2 minutes. Completing the KYC process takes another 2 minutes. From there, you can submit a loan application, which again takes another 2 minutes. You just have to input the amount of Bitcoin that you want to use as collateral or the dollars you want to borrow. We lend you 50% of the dollar value of the Bitcoin you put as collateral, and our loans start at as low as $500. So you can test the entire system with just $1,000 worth of Bitcoin, get a $500 loan. We disperse that to your bank account or in stable coins, however you prefer, and the loan can be repaid at any time. Importantly, at LEDN, once you take a loan, there's no obligation for you to make monthly interest payments. The interest accrues until you want to repay the loan, and you can do that at any time, partially or fully, no penalty. So it's really intended to be a very clean, safe way for you to get dollars, use your Bitcoin as collateral when you need cash and don't want to sell your Bitcoin. And whether that is to make a new investment, to buy a house, to make a down payment for a house, that's entirely up to you on how you use it. We disperse funds on average in 9.6 hours between your Bitcoin hitting the loan collateral address and that hitting your bank account, typically around 9.5 hours, depending on the time of day you do this. But it's incredibly fast and it's very easy. You can look at what people have to say about the service online, but that's really what we've been doing for the last 7 years, is building the safest and fastest, most efficient way for you to borrow against your Bitcoin.
I know some news came out recently. Some of the big banks are looking at, testing using Bitcoin for things like mortgages. Do you see this as competition, and how do you plan to remain competitive as more of these mainstream products come to market?
We've always believed that banks are inevitably going to be entering into the space. And that's largely why we've taken the strategic approach that we have. In fact, we work with several banks already as some of our partners. And I think this is only going to continue. And why I think they can be great partners for this industry is because they have a lot of capital at a very low cost base. And if we can make these loans cheaper for Bitcoiners, the pie is going to grow to a size that is going to support LEDN doing very well, along with other banks also doing very well. We want to have the biggest slice. We are the market leaders in Bitcoin-backed loans today. So we want to defend our slice and continue being the biggest lender in the space, even as it grows, even as these guys come in. But I think overall, it's going to benefit every Bitcoiner that has ever wanted to use these types of services, because they're only going to get cheaper and safer and more available. And with that will come more adoption. So it is a virtuous cycle. And that's also why we made the changes we did recently. We believe that Bitcoin-backed loans are going to be a multi-billion-dollar opportunity down the line, and it's going to 5 to 10x in the next 5 years. And we're leading this vertical. We see a massive opportunity to take this industry from where it is to where we know it can get. And we've rebuilt the trust around this vertical since 2022, after LEDN was really the only lender left, with all these fraudulent players vanished. And now that we're here, we're really excited and we just want to take it to this next level.
I think folks who've been in the industry for a while, some of them may still be traumatized by back in 2022, you just mentioned with some of those fraudulent players. You mentioned at the beginning of the interview that LEDN has changed its business model. It stopped lending out funds. Talk to me a little bit more about how you assure your customer funds are safe, especially after what happened back in 2022.
Absolutely. So one of the main triggers that led to the collapses of all these other lenders were two things. Number one, they were generating, they were offering yield products into the market. And to generate this yield, they would take deposits and they would issue unsecured loans to groups like Three Arrows Capital, who fantastically collapsed and generated a massive hole on the balance sheet of a lot of these lenders, including Voyager and others. And lending digital assets unsecured to generate yield has a very different risk profile than lending dollars backed by Bitcoin sitting in custody. It's entirely different risk profile. And the other practice that got a lot of these guys in trouble was that they were rehypothecating the collateral that was being pledged by their clients. They were lending this collateral out, also unsecured at times, to generate yield. At LEDN, we do not lend Bitcoin for any type of yield. So there is no Bitcoin lending whatsoever at LEDN. And the only type of loans that we offer are custody Bitcoin-backed loans, where your Bitcoin sits in the custody of either LEDN or one of our funding partners at all times. It does not move. It does not get lent out. Nothing happens to that Bitcoin other than it's sitting there as a protection for the dollars that we've advanced to you. So LEDN is, although the products on the surface may look similar, really the important thing when you're considering these types of services is that you understand what's happening to the products in the back end and how they're able to give you those dollars and keep that Bitcoin safe. The other point I'll make is that LEDN has the longest running proof of reserves program of any lender in the industry. We were the first ones to ever do proof of reserves, and it's the longest running program. It's still live today. Importantly, none of the companies that collapsed had a proof of reserves protocol. All of the guys that went under never bothered to do it. And so at LEDN, we've always prioritized safety and the security of client assets. And we haven't historically been known to be the cheapest because when something looks too good to be true, typically they're like brushing the risk around the corners or building it into the fine print. At LEDN, we don't play any of those games. What you see is what you get. And that's what people love about us and why we're seeing the growth that we're seeing today, at least in how I interpret it.
Mao, it's been such a pleasure hearing your insights today. Thanks so much for joining me.
My pleasure, Jen. Happy to do this again anytime.
That was LEDN co-founder and Chief Sales Officer Mauricio Di Bartolomeo.